Sir Juanis, by stepping a bit back on the whole chart of the PSEI, there's a person asking, nasa na ba tayo sa Elliott wave natin? Can this market be viewed under the lens of the Elliott wave?
Well, if you're looking into an Elliott wave, we are now into a bear market swing. And normally inside a bear market swing, you will invert the Elliott wave situation. And I think you're only maybe in the midway of the entire bearish situation. So yes, we may have a rally, but we could still have to deal with one more decline. So if we're looking at it as a big ABC, we have not even finished the A, and we're just waiting to go into the B wave rally.
Oh, okay. All right. So that's a bit may cause some concern. All right. So we have another question here, sir. We have you a while ago. You've mentioned different shapes of recovery: the U, the V, and the W. Which
Right.
do you think is most likely uh, present in this market?
I think if no cure is taken in good time, it'll more likely be a U shape or a W shape.
Okay. All right.
The V shape I will reserve because it's really something surprising has to come in to be able to inject that. Now I
Okay.
know that the Federal Reserve has been throwing a lot of stimulus right now, and that could be, that could be a monkey wrench in this entire thing. But the problem is you're trying to fix the economic impact, but what's happening outside is not being fixed because the plague is still there, and that COVID-19 exists, and until that thing can be taken out, and we don't know how long it will last, and those things can still prove to be a hindrance to all the stimulus that people are making.
Yes, sir. And for the U and the W, how long does it usually take? For instance, the market does a U-shaped recovery.
That could easily do about 4 to 6 or even 8 months long. In a W, maybe it's a little shorter.
Okay. All right. Okay, we have another question here about I guess these are customers who belong to your first class of investors, sir. These are the
Okay.
ones who are looking into taking positions into the market. The question is, which one are they going to prioritize? Which positions, which issues have better chart patterns?
I think, like I said earlier, you probably want to stick with mainline issues first for two
Okay.
reasons. One, liquidity. In a decline, you have to be able to, just in case you need your money, to get out. And if liquidity is a problem and you cannot sell, what you're anticipating as a potential risk could magnify 2, 3, or even 4 times as big. Because if you want to sell a lot of the small caps right now and there are no buyer, you'll probably be able to sell it, but you'll probably sell it 10 or 15 or 20% lower. So liquidity is an important condition here if you're even attempting to do some bargain hunting. Next, buy a good story name that's not being hit out there by something. For example, um, if you're talking about gaming, you're talking about some property stocks that have POGO. Uh, if COVID-19 starts to be able to get solved somehow, you still have to solve the issue on POGO, and those might be underlying things that could affect some of those businesses. In fact, what you should be looking at right now, and I think April talked about this in her earlier webinar, look for the issues that have businesses that might either be neutral or beneficial in an environment like this. For example, if you're talking about companies that are selling in groceries right now, I mean, that could be an advantage. Telcos perhaps may not be too hit because everybody's home right now using all the telco services and broadband services. So you probably want to be able to look at issues like this first because they have this points of view where people will say, okay, they're not too badly affected. They could be able to generate better earnings in the long run, and it could generate also bigger rallies for them.
All right. We also have a question, sir, that pertains to the second set of your customers na mga medyo are experiencing some losses. And we have this
Okay.
particular client who's asking what to do if you already have an 80% loss in your account.
Well, again, if you're 80%, I'm not sure if you're totally invested or partially invested. And I think I talked about earlier. If you're too heavy into the market, regain some comfort. Now, I know you might say it's easy for me to say, I've been in your shoes before. In the early parts of my career, when I did not do that. I used to be holding Metrobank all the way back down when I was still not a full-blooded technician yet. And those are the things that taught me a lot of lessons. And I was always saying, oh, one day this will rally back. And yes, it did. But it took maybe 2 or 3 years to do it. And I couldn't wait that long. And I ended eventually selling it near where the low was. So what I was telling you is just a prime example of what happened to me in my early career here as a trader. And I'm just trying to be able to impart it that if you really feel that you want to hold your positions, just make sure it's not so heavy so that you can bear with the pain that you're seeing. Because that 80% loss that you're seeing right now, if you can indeed hold on, should not be 80% forever. You'll be able to recover that back.
Okay, thank you, sir. Another question from a customer who's looking to take positions. I think this customer is trying to buy slowly. So, Sir Juanis, what's your percentage in terms of tranches when buying? I guess she's asking in terms of your style. If you're doing this slowly, how slow and how long?
Okay, so you're taking an investor point of view here, not a trader point of view. As an investor, I think since we can only guess as to how long this is going to be, maybe you want to do is you want to take a monthly add-on into a position and maybe space it out. I'm thinking, like I told you earlier, 6 to 8 months could be a potential turnaround situation over here, and just in case I'm wrong, space it out maybe in the course of 1 year if you wish. Maybe gradually put the same amount all through in, maybe all the way towards the end of the year. I think by that time, a lot more clarity in all of this will probably be taking place. I really hope that what April talked about earlier on in an earlier video, saying that given the China and the South Korean example, that perhaps a 3, maybe 4, even 5 month period should already give a lot more people clarity and hopefully a potential for the market to start a gradual recovery.
Okay, thank you, sir. Another far off question, I think, from one of our customers who has access to global markets. He's asking whether it's good to diversify or buy gold.
You know, diversification in a market like this does not work because, like I told you, uh, sinking tides will sink all ships. And I think the only thing I would rather tell you, though, that when the market starts its recovery, you really have to be perhaps taking in good quality issues in that sense. And sometimes, if you only buy one stock, it might not climb as big as the rest. So it's only on that frame that I probably would want to maybe have 3 to 5 issues at the minimum that I can scatter between good quality index names to be able to do this, or buy the index fund.
Okay, sir, thank you. So a while ago, you mentioned, I think you have a chart of the PSEI. There's a client asking a question. Is it possible for the PSEI to even go lower than 3,000? Because I think there's a meme going around with Iron Man in it, yung I love you 3,000. I think when there's discussion about the market, they often show that
Well,
meme.
I don't like to say that it will not, because I really don't have a crystal ball that will tell me that that being a fact or not. But from bear market low to bear market low, suggestive of a 3,300, the fundamentals are much more higher in value than what that area will be. So even if it does break that 3,000 or it tag that 3,000, I don't think it's going to stay there for too long. So if you see
Okay.
it, please take advantage of it.
Ito, sir, we have a question from a trader. What would be your target for the first bounce of the index? Is the first day exponential moving average a good target?
Yes, you can use the 10, you either use a 10 or 20-day exponential moving average as a target. But please remember that this has to be the viable rally, and you will see, because we will not be the only ones doing it. You'll probably see it happening from the US and Europe and parts of Asia all rallying at the same time. That's when you know a more viable rally is coming up for it. And I think those targets I gave you are potential. But start with a 10-day EMA, and then move it up to the 20 if possible.
Okay, we have another question here, sir. You mentioned a while ago that we should be worried whether that decline is going to be controlled or something that's not controlled. Now,
Yes.
aside from looking at the price intensity, what other indicators are you looking at to tell you whether it's controlled or not?
Well, normally the presence of a controlled reaction means it's more gradual. That means that bargain hunters are gradually buying the position already. They're not buying it aggressively, but at least you know as prices are moving into that decline, there is some mechanism of defense working its way inside. So that controlled movement is very important. Second is the break over your short-term averages will also give you that. And third, if you're looking at it, you can also look at your MACD. If you see a crossover on an upside, we've not seen any of that even early as of right now yet. But if we do see that, that will contribute to a much wider rally. So you will look at those three indicators: the controlled decline, the short-term moving average, and your MACD.
Okay, sir. Thank you very much. Here's I think a specific stock question. Um, since PLDT has been on a downtrend even before COVID-19, is it time to sell now, or is it can it still regain its good old days?
I think if you haven't sold it yet, I don't think you want to sell it because you probably don't. So I'd
Okay.
think that if you waited all this time, you might as well wait a little bit more because it's not really that intensified anymore. There's potential for the business to turn itself around as of this stage, as of what I understand. And hopefully that these conditions can be able to line it up quite more formidably into the next trend reversal. Because if you haven't sold it yet as of this time, you might as well wait it out already.
Eto, sir, I think that's one of the first questions asked with regard to call advantage. I think we have a fan of the VMS system.
Okay,
When do you think that the M of he noticed that all of the M's are stuck in red.
right.
So he's asking whether when it will change, when that condition will change.
Well, remember, a rally has to come up first. Without a rally, if you only have very, very brief or minute and blunt rallies, that red color will not change. So what will happen is you need a relatively good modest rally to come in that will break above either the 10 or 20-day moving average, and then perhaps it might tame down its color. But until that, you're not going to get those red colors change. So just be patient. Eventually, you will see it.
Thank you, sir. And again, for those who are not so familiar with Call Advantage, it's a platform that we have designed for guidance. You can sign up for that, and you can have an instant, signal on the momentum of that particular stock. So I'll talk more about it in a little while. I guess we have room for one more question. This is from one of the clients, I think, who just signed in a little bit late. But is it better to wait for the bottoming process to form before getting in? Or should you already make test buys for the long-term positions on a possible bottom area? So I guess, yeah, yeah. Go ahead, sir.
If you're a trader, I would suggest you wait for it, especially if you're new at this, because believe me, you coming in too early and having to be able to witness another harrowing drop, I don't really know if you can painstakingly wait through that particular ordeal. In fact, there's a statement out there that says Wall Street's graveyards are filled with people who were right too soon. And what that means is they ended up in the graveyard because they couldn't last, because they got so scared after trying to buy too early. And when prices continued to fall down, they shot their positions out, and then the market rallied right after that. So you probably want to wait for those reversal patterns to appear first, at least until more experience comes in to be able to help you out.
I don't think we can answer this one. Uh, any thoughts about, no, sir? There's a client asking, do you have any thoughts about whether the US will go into a recession?
Well, I'm not a fundamental analyst, but
I figured so.
I've probably been reading the same articles you have, and
Yeah.
quite a number of people are already forecasting that there could possibly be one as a result of all this. Um, in fact, I think 1.5 years ago, people already projecting a potential recession coming out, but it got delayed, and perhaps now it just got accelerated. So it's quite possible, but I really hope that even if there is one, remember, I think prices have overshot their fundamental values on the downside. So that alone should be able to give you a rally space, whether the recession comes or not.
All right. Last question, sir. There's a person here asking whether the market condition would be different if shorting was allowed in the Philippines.
The only difference is that you will have us more volatile because you would
Okay.
see rebounds and declines that will be accentuated. Because on a way down, you could clobber it down, and on a rally, you will do short covering, so the volatility will increase, but the trend will not change. When the market decides to go down, it doesn't matter whether you have shorting or not, it will follow that particular trend. The only thing that will change is the volatility band. It will increase if shorting is allowed.
All right. Thank you very much, sir. Thank you very much for your thoughts, your presentation,
And
and for
thank you
answering
too for
questions.
everybody and for time to listen.
If ever we weren't able to cover your questions today, we'll be happy to answer them through the Facebook channel. So here are the pages. You can go to facebook.com/COL Financial and facebook.com/COL Premium. We also have YouTube pages. You'll find all our related videos, including this one, in our YouTube channel with the same handles. All right. So we also like to invite everyone again, if you want to continue this discussion and some more content, we have a COL Premium official Facebook page. You can just copy the URL in the screen that you see and click join so we can approve your joining. This is a group which is exclusive to COL Premium customers. So make sure you take those joining questions seriously. All right. If you have any more questions, feel free to contact us through helpdesk at COL Financial. For COL Premium customers, you can get in touch directly with your CEMs. If you don't know who your CEM is, click the Need Help button, and they are accessible through their mobile phones and through their emails. And that's it. Thank you very much, everyone. Thank you very much, Sir Juanis.
Stay
Once
safe,
again,
everyone.
stay safe, and we'll see you on the next webinar.